Welcome back. Joining us on the show now is former Petroleum Secretary, Mr. R.S. Pandey. Mr. Pandey, thank you so much for joining us. And even as whatever is happening in the international markets, the whole fact that nearly 80% of the global countries actually import crude and India's dependence clearly is high. Within the Asian markets, our growth is on the higher side as well. Even as we import from Russia at a much discounted price, with what's happening, how do you see that impact coming in for India?
The way things stand as on today, this oil price cap will not have much difficulty for India.
Okay.
After the war, as the situation developed, India started getting more and more from Russia. Now this price cap at $60 minus the insurance and shipping costs, well, Russia is not getting more than this at the present moment. So there is no difficulty. And even if it goes above 60, then as we understand, Russia has arranged logistics and they will deliver. India has made it very clear that they are not going to be subjected to this price cap.
Right.
So is the case with China. So as the situation stands today, there is no difficulty.
Mr. Pandey, even as we have seen crude prices come off, even as India is getting crude at a discounted rate, but the fact being that the rupee has been depreciating and with these price caps, do you think India will have to pay more when it comes to insurance and free trades?
Well, as we understand as of now, Russia has been delivering through Western insurance, etc. And if the price cap is at 60, and the delivered price comes to less than that, then the price cap does not take effect. The sanctions don't take effect. If it goes beyond this, then there is a question of sanctions. But then Russia has also arranged alternative logistics. So that shouldn't really make much of a difference because the global demand situation is such that the price is not going to go much high. China, as it stands, the global economy in Europe and US, as things stand today, there doesn't seem to be any difficulty. But should China's economy recover, COVID situation improves, and then the international price goes up, then there could be some issues, but one doesn't think that will be the scenario. But additionally, those who impose the price cap, they have also said that every 2 months they are going to re-look at it. They revise it upwards or downwards. So nobody really wants the crude supply to stop. China and India have made it very clear they are not going to be part of the price cap because that suits Russia. If they become part of the price cap and the price goes beyond this level, then Russia might disrupt supplies even at a cost to it, economic cost to it. So today there is no difficulty, but if the price goes up and if the revision is not consistent with Russia's liking, then there could be serious issues. And I think all concerned will like to avoid that scenario. That is how they didn't cap the price below 60. There were demands within Europe that let it be at 30, let it be at 40, but those who imposed finally, they kept it at level of 60, which suits almost everyone in the current situation. And OPEC is also watching, and they have made it very clear that as on now, they will not revise it. They will not say whether they will increase the supply or decrease the supply, but they are on wait and watch, and they are seeing how the situation develops.
Clearly. Mr. Pandey, as we were discussing before the break as well with our global guests, that 2022 clearly has been a difficult year. We've seen a huge volatility and so many things unfolding. And as we enter into the new year, it's not that things are changing because uncertainty is just about continue here. How have you seen the Indian demand in 2022? What's your sense, even at these higher prices, even at skyrocketing fuel and aviation prices, we still have seen demand continue to grow?
Well, India somehow, although we are in a free pricing regime, the prices did not revise for the last several months, except one time when the excise duty was reduced. So it has not really been a free pricing situation, given the level of inflation, given the requirements of elections. Government of India did not touch the prices, and the companies were apparently taking instructions from the government. But now the price level has come down, and there is certainly a need for revising the prices downwards, retail prices. Now let's see how it goes, because companies have incurred a lot of losses. If you see their balance sheet for the past 6 months, they are in a really loss situation. About 20,000 crore is the combined loss of the three oil marketing companies. So unless the level of taxation, the excise duty comes down, unless the VAT rates come down in various states, well, it is difficult for Government of India to revise the price downwards.
Clearly. So even as in the international markets, India may stand tall in sense of getting a discounted crude, but for the Indian markets itself, the thing really seems to be getting slightly difficult or serious as it might be. Mr. Pandey, as always, thank you so much for joining us, sir, with your sense on the energy and the Indian aspect there. But with that, it's time for a wrap on this edition of Commodity Champion. News continues on CNBC TV 18. Stay tuned.